PowerPoint presentation here. Great. All right, so this is going to be the final expense overview, guys. For the best return on your money, pour your purse into your head. The point there is that you need to invest in your education. You need to learn about what you're going to be presenting. The more information that you have, the better your odds of converting a lead into a sale. Because in order to get a sale, you need to teach somebody something they don't already know. That's really where you'll start to build rapport and build respect with your clients. For the most part, people understand that final expense is going to provide them with an end-of-life benefit when they pass away. Pretty much everybody knows that. What's going to separate you from the other agents out there is that you're going to be able to provide them with additional information that they didn't already know. We're going to touch on that right now. Okay. So here's a quick overview. Here's the questions that we're going to answer. What is final expense insurance? Who is final expense for? How does the underwriting for final expense work? How much does final expense insurance cost? How much coverage does my client need? And then who offers final expense insurance? So let's start right out with what is final expense insurance? Just a basic definition here. So essentially what it is it's a whole life insurance policy, also called a permanent policy. So whole life insurance and permanent policy are two names. It generally is going to have a small death benefit. And when we say small, we're talking about 5,000, 10,000, 20, 30, up to about 50,000. It's a little bit easier to get approved for from a traditional whole life plan. Final expense insurance can also be called funeral insurance, which is kind of dark. I don't tend to call it that. Can be called burial insurance. It is traditionally a simplified issue product. Simplified issue means there's nobody coming out to there's no nurse or paramedical exam that they have to complete. There's nobody coming out to their home to weigh them and draw blood and so forth. It's just going to be medical questions that they have to answer over the phone. And then the underwriter for the insurance company is going to check their prescription history and their MIB report, which is the Medical Information Bureau report. Some other names here can be called simplified issue whole life insurance or modified whole life insurance. Basically, they're just all in terms for an insurance, for all marketing terms that the insurance industry uses to sell a small whole life policy, again, with a face value of about as low as 1,000 to as high as 50,000. So some examples of what a final expense policy can be used for. Pretty simple list here: a funeral service, a burial or cremation, a post-funeral gathering, flowers, music, obituary, other funeral arrangements, medical bills, nursing home or residential care, a nest egg for a child or grandchild's future, so a legacy, a special trip, or a donation to a charity that's meaningful. Right? So who is final expense for? Who is the target customer here? Who should you be offering this product to? What's interesting is that final expense plans can go all the way down to, it says 0, but less than a year old, and all the way up to 89 years old, depending on the carrier. So each carrier is going to have a different set of issue ages. And we'll start to cover that a little bit more here further on. And so when you have somebody on the phone who's under the age of 45, you will have options to sell them a final expense plan. But typically, final expense policies are best for ages 50 plus. Under the age of 50, you can be looking at other type of products that maybe have a better opportunity for growth of cash value if they're under age 50. You need to be either a United States citizen or a permanent resident, so we are going to need to have a social security number. It can be used for retired and working people. Either one is a good fit. It can be offered to people that are in good health or people with pre-existing conditions. When you have a final expense plan, there are guaranteed issue options. So that means they'd be able to be approved regardless of any pre-existing conditions they have. And then, of course, people in good health are going to qualify as underwritten. And then it's also a good fit for people that are currently insured or uninsured. So if somebody already has an insurance policy, that doesn't necessarily mean that there isn't still a need for a final expense. So if they've got a policy like a whole life plan that's maybe $250,000 or $500,000, or they've got a term policy that's $250,000 or $500,000, a final expense plan is still going to fill in a void there. It's still going to fill a need there where it's specifically for those final expenses And that way, that full death benefit can be left specifically to the beneficiary without having to pull out that extra $10,000 or $15,000 that are needed for final expenses. So happens all the time that somebody maybe has a large benefit on a term plan or a whole life, and then they buy a second final expense plan to go side by side. All right, so just because somebody already has insurance doesn't necessarily mean that a final expense plan wouldn't make sense for them. All right, so how does the underwriting for final expense plans work? There's a couple different underwriting classes here. You have level/preferred. That's kind of tomato. That's the same. Some carriers will call their preferred rates level. Some carriers will call their level rates preferred. Essentially, it's just that's the lowest monthly premium is going to be reserved for people that qualify at the level or preferred classes. That's for traditionally the people that have the best health profile. A graded benefit, what that's going to be is somebody is approved essentially for the plan, but they don't necessarily have an immediate death benefit available to them. So graded means, yes, the insurance company is going to approve the application, but there's traditionally going to be a waiting period of 2 or 3 years, depending on the carrier. We'll touch on that a little bit later. And during those first 2 or 3 years, if the insured were to pass away for any other reason other than an accident, their beneficiary would only receive the premiums paid into the policy plus a certain percentage, either 10 or 15% traditionally. So graded means there's going to be a 2 or 3 year waiting period before the full face amount is payable. So again, let's say someone's paying $100 a month. They've been paying in for 12 months, and then unfortunately they pass away. So they've paid in $1,200 worth of payments. Their beneficiary would not receive the full face amount of, say, $20,000 or $30,000. They'd receive that $1,200 plus 10% or 15%, depending on the carrier, of that or of that $1,200. So again, 10% of that would be $120. So the beneficiary would get $1,320 as the death benefit if it's within the first 2 years. Okay. Modified would be you submitted the application, and based upon their pre-existing conditions or based upon their height and weight, there's some factor that the underwriter is going to not offer the preferred rate but offer the modified rate. The modified rate is normally going to be more expensive and have less benefit. So it's not going to be as favorable for the client as a level or preferred rating class, but it will allow a client to still secure protection. Again, it's probably going to be a little bit more expensive than the preferred rate, and it may have a lower death benefit than the preferred rate would. So if you're submitting a product modified, again, it's usually due to that person having pre-existing conditions or not meeting the height and weight charts and so forth that are required for the preferred rate. And then again, guaranteed. So guaranteed issue means they're going to be approved regardless of any pre-existing conditions. Anytime a policy is a guaranteed issue policy, it's not going to be an immediate death benefit. They're going to have a waiting period of 2 or 3 years, and then their beneficiary, should that insured pass away within the first 2 years, their beneficiary is going to receive the premiums paid plus a percentage. Okay. Now, nice thing about these carriers, they are simplified underwriting. So again, as I touched on earlier, no blood and lab works required, no paramedical exam, and nobody's coming out to weigh them at their home. Nobody's coming out to draw blood. They're just going to have to answer a list of medical questions on the application to determine their eligibility. And then the underwriter is going to check their prescription and MIB report, again, essentially to make sure that the client is being truthful on the application with the medical questions. Guaranteed issue we touched on, but I'm going to touch on it again. This means that as long as the applicant meets the age, state, and citizenship requirements, they will be approved in underwriting. Just be mindful, again, as we're going to get to here in the next part, they're going to have a graded benefit. So they'll be approved, but there'll be a waiting period of either 2 or 3 years, depending on the carrier. And then the beneficiary, should the insured die in those first 2 or 3 years, will receive premiums paid plus a percentage. And that's exactly, again, what the graded benefit is on that last piece. All right, so moving on to the next slide. Let's talk about how much final expense insurance costs. So I ran some rates here for us based upon the carriers that you'll have. These are going to be 20,000 face amounts based upon male and female. So a 55-year-old male can get a $20,000 policy for $67 a month. Female is going to be at $51. So you'll notice a theme here. Females are always going to have lower rates than males simply because their life expectancy is going to be longer. So it allows more time for the carrier to receive payments. A male at 65 will be 104, female at 78. I should also mention that this is rates in the state of Florida. So the rates do change based upon geographic location. So this is in the state of Florida. So male at 75, $20,000 policy, 191, female 138, 85-year-old male 382, 85-year-old female 268. So obviously as the age goes up, just makes sense. The premium is going to be more expensive because there's less time for the carrier to receive payments on average. So they have to collect more per month to cover their spread. All right, this is a question sometimes that you're going to have to help a client answer and determine exactly how much coverage they need, because you'll ask a question, ma'am, how much coverage are you looking for? And either A, they don't know how much they need and they're going to look for you for direction, or B, they're going to ask for more coverage than realistically they need. And if they can afford that coverage, even if it's more, I'll probably still offer it to them. But if we're in a situation where I say, hey, ma'am, how much coverage are you looking for? And she says, well, I want $40,000 worth of coverage. And then I go and run the rates and it's, $265 a month and she just can't swing it. Some agents in that scenario might just say, well, sorry, I wasn't able to help you, and, move on to the next applicant or move on to the next lead or client or prospect. Well, what you should do in that scenario, if she says she wants $40,000 worth of coverage and you give her the quote and she can't afford it, at that point, we're going to start to ask the question of how did you arrive at that number of 40,000? Why specifically do you want $40,000 worth of coverage? And see what she has to say to that. Most of the time they're going to say, well, that's just, seems like a good number. Okay, well, realistically, there's a step-by-step process, ma'am, that I can go through with you to help determine exactly how much coverage you need. And you can see by going through this step-by-step process, guys, the first thing you want to find out is how much are their monthly bills? What are their monthly household expenses? And we're going to want to multiply that times 3. So essentially their final expense plan will provide 3 months of monthly expenses for them. How much debt do they have? What are their total monthly debt payments? Multiply that times 3 as well. You're going to look at what the average cost of a funeral is in their area. So there's a great website that you guys will want to write down. It's funeralocity.com, funeralocity.com, kind of like travelocity.com, but it's funeralocity.com. And you'll be able to plug in their zip code, or they can plug in their zip code, and it'll actually show real quotes of what funeral homes within a certain mile radius of their house or their zip code charge for a cremation, for a traditional burial, and so forth, so that you can get a sense of exactly how much it's going to cost for a funeral in their actual state, because it can vary state to state and location to location. So you can actually get them a real quote of how much they're expecting to spend. Now, you can see in this step-by-step process, the average cost for a funeral can be about $7,360. So for the purposes of this exercise, we're going to use that number. At that point, you're just going to go ahead and you're going to add those all up. Step 5 has you factor in inflation. If you really want to be a thorough agent, you can certainly factor in inflation here for that person as well. And you can see that they arrive at about $18,706 in this example. So again, if that person is asking for $40,000 worth of coverage and it's $250, maybe they really only need 20, and $20,000 would be closer to, it's not exact, but about half the price, $125. And now maybe that is an affordable rate for that person, and they're seeing that it's satisfying the need and they're seeing the value. So now, as opposed to thanking that person for their time and losing out on that potential sale, you can, be a salesperson, try to sell value, try to sell need, and actually save that sale from falling to the wayside. So good step-by-step process there. You'll see in our agent resource center that I'm going to show you guys here in a minute that you'll have a link to that. So here's the carriers that we are selling the majority of our final expense with. So we're going to be contracting you guys with these carriers. You know, I'll rattle off a few here: Transamerica, Mutual of Omaha, Aetna, American Amicable, Great Western. Pekin is a new carrier that we just added that has a really nice sales process that I think is going to be really helpful, especially for you new guys. Prosperity, Americo, Royal Neighbors, Foresters, Nationwide, AIG, and Security National. So the reason that we like to have a slew of carriers here for you is so that you can be competitive on pricing in the different states that you're offering products in. And also certain carriers have little niche underwriting advantages that you may need. For example, you know, Great Western doesn't ask height and weight on their application. So you might have somebody who, you know, is, you know, a large individual, but otherwise is extremely healthy, but they're just not meeting the height and weight charts for any of the other carriers. So you're forced to either get them approved modified or guaranteed. Well, you may be able to submit them with Great Western and get them a preferred rate so that they're not spending more than they have to, and they get an immediate death benefit. So having those little underwriting advantages, again, can be the difference between getting a sale or not. So we really try to make sure we have, you know, the niche carriers that are necessary to have the best value for the client as much as possible. So now we're going to touch on some of the specific products that these carriers offer. Starting with Mutual of Omaha. The final expense policy that Mutual of Omaha offers is called the Living Promise. The issue ages are going to be age 45 to 85. The benefit amount is going to be as low as $2,000. It goes as high as $40,000 based on approval. Not everybody ages 45 to 85 is going to qualify for $40,000. It's going to be based upon their specific situation. So you'll see that when you're quoting based upon their age that you put in there, how much benefit amount they'll qualify for. It is an underwritten plan, so there's going to be medical questions that have to be asked. There's going to be a prescription background check, and there's going to be an MIB report check, but there is no medical exam. So again, it's simplified issue. They're only going to accept a bank account. So it's EFT only. That's electronic funds transfer. You're not going to be able to submit these policies using a direct express card or a credit card. They need to use a bank account with a routing and account number. Okay. That's important because other carriers may provide those options to you, and we'll touch on that in a moment. Now, this plan does include living benefits for no additional cost. So when you quote the policy, you'll see exactly how much they're going to be charged for that specific benefit amount. And then included in that premium is going to be these living benefits. So they have an accelerated benefit, which is a one-time benefit if given 12 months or less to live. So essentially, the insured or the beneficiary can receive a portion of the face amount while that person is still living. Okay, that's helpful, and here's why. If someone is given 12 months or less to live, that payout can come out, and now you can take that money, go to the funeral home, get that paid for, get that all squared away, so that, you know, when that unfortunate event occurs, so that that person passes away, a lot of times you're going to have to, you know, the person who's handling those final arrangements is going to have to go to the funeral home, pay for that out of their pocket, and then wait to get reimbursed from the life insurance company. Well, if they are given 12 months or less to live, you can get a portion of that face amount accelerated. Now you have the money ahead of time to bring to the funeral home, so you don't have to pay and then get reimbursed later. You get the money up front. So again, just helpful for the person handling the final arrangements. Or maybe, you know, if the beneficiary and the insured have made an agreement that, hey, a part of that money that gets accelerated, you know, again, we want to take a special trip, or we want to do something special, or we've got, you know, maybe some medical bills that we need to get covered right away, or maybe there's some experimental treatment that we have to pay out of pocket for. There's a variety of different reasons, and you know, a lot of times people don't need help figuring out ways to spend money. It's very easy to do that. There's another benefit here for confined care that's a living benefit. So it's a one-time benefit if confined to a nursing home for 90 days and are not expected to remain and are expected to remain for the duration of their life. So if they get confined to a nursing home, there's a payout there that can help cover the cost of those nursing home fees, which can be very, very expensive. So great living benefits included with the final expense plan. You can see there that the confined care is just not available in Arkansas, Montana, or North Carolina, so be mindful of that. Moving on to the next plan. This is the final expense plan offered through American Amicable. American Amicable, you'll find, is a very easy application, very quick underwriting, and commissions get paid in a timely manner. Very agent-friendly company. Their issue ages are ages 50 to 85. The benefit amounts as low as $2,500 to $35,000, again, based on approval. Again, simplified issue, so it's underwritten, but there's no medical exam, just medical questions on the application, prescription check, MIB report. You're going to see that's a consistent theme amongst the majority of these plans. This is only going to accept a bank account, so you have to attain a routing and account number from the client in order to apply. They also have living benefits included at no additional cost. So if given 12 months or less to live, up to 100% of the face amount will be accelerated to the client, again, to use for the things that we just discussed prior, prepaying for the funeral home, not having to wait to get reimbursed and so forth. And then again, confined care, this is that nursing home benefit, 50% of the face amount on immediate death benefit plan, if confined to a nursing home for 90 days and is expected to remain for duration of life. Again, not available in all states. And that's, again, that's probably not the insurance company refusing to offer in all states, as some states are not allowing them to offer that benefit for whatever reason. Okay, this is the Transamerica plan. You guys are going to find when you start doing quotes, Transamerica is going to have the lowest rate in many, many of the states that you're quoting products in. They're being extremely competitive right now. They know that if they have the best rate, they're going to get offered more and more. Just be mindful that the turnaround time for approval might not be as fast as Mutual of Omaha or American Amicable. So I want you to know that going in. I've seen cases take up to a week to be approved, whereas Mutual of Omaha and American Amicable will approve people in as little as 24 to 48 hours. So you get your client the best rate, but the trade-off is that it takes a little bit longer to get approved in some cases. But they've got issue ages from age 0 to 85. Again, they're just 0 years old. They have to be born in order to qualify for the plan. Benefit amounts, low as 1,000, as high as 50,000. So a nice high benefit amount there for Transamerica. It's underwritten, but there is no medical exam. Again, that's pretty standard. All the plans we've looked at so far are going to have that same simplified issue. They do also accept a Direct Express card in addition to a bank account. So if you guys don't know what a Direct Express card is, what a Direct Express card is it's a reloadable debit card that individuals receive their monthly Social Security benefits to. So if somebody doesn't have a bank account, the way that Social Security pays them their monthly benefits is they deposit them onto one of these Direct Express reloadable debit cards. Okay, so some carriers are going to accept that Direct Express card as payment, but be mindful, as said in parentheses here, your commission is paid as earned if EFT is not used. So it's great, you'll be able to use that card, but your commission will no longer be on a 9-month advance. It's going to be paid as earned. So you still make the same amount of money over 9 months, don't misunderstand me, but you're not going to get all that money up front. So again, that's the trade-off there. What we really prefer here as agents is you want to use a routing and account number. You want to get that checking account because you're going to be able to get paid your advance on your commission, which is necessary, obviously. That goes without saying. All right. They do have living benefits as well. Seems to be a theme here. Nursing home benefit, 100% of face amount, less any premiums due in the next year. Okay, so let's say they have a $20,000 face amount and they're paying $100 a month. That's $1,200. So they'll accelerate that benefit, but they're going to withhold the next 12 months premiums. So it'll be $20,000 minus that $1,200. So they'll get $18,800 accelerated. Okay. Now this benefits in Florida only. The accelerated death benefit, the benefit that's in every state is the nursing home benefit, which again, 100% of face amount less any premiums due in the next year upon diagnosis of a qualifying event or confined to a nursing home. Okay, so those appear to be pretty standard for the products that we're looking at. So be acquainted with those, be familiar with those. Those are also outlined in the product brochures that you guys will have access to as well. Okay, Prosperity, personal favorite of mine. Really like working with this company. They've got a lot of agent-friendly tools and features. Issue ages are going to be age 50 to 80. Benefit amount is as low as $1,500 to $35,000. Again, underwritten but no medical exam, so simplified issue. They're going to answer medical questions on the application, and then they'll be a prescription check by the underwriter and an MIB check by the underwriter. Okay, so again, very consistent on how the underwriting works on these plans. Now, for methods of payment, they accept EFT, that's the electronic funds transfer, Direct Express, and credit or debit cards. As of right now, the commissions are as earned if you use anything other than a bank account. Now, I have heard through the grapevine that they may be advancing on Direct Express cards later on this year. So stay tuned on that. That would certainly be helpful. And you can also match up the recurring monthly payment with the day of the month that they receive their Social Security benefits. So that'll really help for persistency, because if you try to take their money on the first of every single month and they haven't received their Social Security benefits yet, a lot of time that payment will be declined. But with the application for Prosperity, you'll be able to tell them, hey, take the payment on the first Wednesday of every month, the second Wednesday, the third Wednesday, basically whenever that person gets their Social Security benefits, so that when we go to draft that payment, we know that that money is already going to have been there. That's very helpful for your clients. The other thing that's cool about Prosperity is regardless if the policy is approved, preferred, graded, or modified, you're still going to get the same commission percentage. So you'll notice with some of these other carriers, as your contracts start to get approved, if the product is approved, modified, or graded, as opposed to preferred, most of the carriers are going to lower your commission on that. Prosperity recognizes that that can be hurtful for an agent. So regardless if it's approved preferred, modified, or graded, you are still going to get the same commission percentage. Trust me, I have the advantage of foresight for you guys. That is going to be extremely helpful for you. This is a very agent-friendly company. They also have the option to voice sign an application as opposed to e-sign. So if you have a client who maybe isn't that tech savvy and getting an e-signature done via email, there's just no way that's going to happen. You can do the application with a voice signature. You fill everything out on your side, and then you do a quick conference call over to Prosperity's underwriter, and they'll just verify the information on the application over the phone pretty quickly, and then your application is submitted. So super, super helpful. They also have living benefits as well. 50% of the face amount if given 12 months or less to live. One final thing that I'll mention about Prosperity, they have a very friendly agent bonus, where essentially if you do $25,000 of annual premium in a quarter, you'll receive 10% of the premium sold, of the annual premium sold, as a bonus. Okay, so if in a 3-month period, each quarter, you do $25,000 of annual premium, you'll get 10% of that. So the minimum bonus would be $2,500 bonus. So again, one of my personal favorites. Really like working with this company. I would recommend that you spend some time looking at their products as you start to get approved here. Now, another product here is going to be with AIG. This is called the GIWL. That stands for Guaranteed Issue Whole Life. Issue ages are age 50 to 80. Benefit amount is as low as $5,000, goes up to $25,000. This is a guaranteed issue policy, so there's not going to be any medical questions. But if you've been paying attention along the way here, you know that if the policy is guaranteed issue, that means that there's going to be a waiting period before the full face amount is payable. So it's going to be a graded benefit. So it's going to be a 2-year waiting period. Okay, so if the applicant passes away, not the applicant, the insured passes away during the first 2 years, the beneficiary is going to get the premiums paid plus 10% as the payout. Now, if they pass away as a result of an accident in the first 2 years, the beneficiary would get the full face amount. But anything other than an accident, it's a 2-year waiting period, so the beneficiary will receive premiums paid plus 10%. Okay, they do accept electronic funds transfer, Direct Express, and credit or debit cards. They also have living benefits as well. Chronic illness, which is a total of premiums paid up to 50% of face amount if applicant cannot perform 2 out of the 6 activities of daily living. In the terminal illness, they get 50% of the face amount if given 12 months or less to live. Okay. All right. So that is the final slide for the final expense. So I'm going to stop right there for a moment, and I just want to open up the floor to some Q&A. So before we move on to the term insurance products, guys, what questions do you have? What's going on in your heads? I hate feeling like I'm just out here preaching. I love some back and forth. So talk to me. Let me know what's on your mind. Don't all talk at once, though, please.
Hey, Spencer.
Hey, how you doing?
Great. This is Craig. I'm wondering if you could tell me, when it comes to, let's just say everything's equal, rates are equal, can you tell me which of the carriers pay out daily, weekly, or once every 2 weeks?
Every carrier is going to pay out daily except for AIG. So any of the carriers that we look at, and any of the carriers that were on that first list, they're all daily pay. So you submit the application to the underwriting department. If everything goes according to plan, you usually get an underwriting decision, in 24 to 72 hours. Again, I'll mention again that Transamerica traditionally can take longer than that. And then once that application is approved, you should expect to be paid, within 24 to 48 hours from them collecting the payment.
Thank you, Spencer. I have 2 other questions. I noticed number 1, that you had 12 carriers listed. We've only covered 4.
Mm-hmm.
And then the second question would be, go ahead and I'll let you answer that one first.
Yep. So those are the carriers that I've highlighted. You'll receive brochures and additional information on the other carriers. But what I'm really targeting first off, these are going to be the phase 1 carriers that are going to be the first carriers that you start to sell. Again, because they're going to be competitive in terms of price, they're going to approve quickly, they're going to pay you quickly. You're going to have more and more carriers approved as time goes on. But that list, that's the phase 1 carrier list that I always make sure everybody understands and knows how to sell first, so that you can get started as soon as possible. And then as time goes on, you'll start to get more acquainted with the other ones. But expect that in the beginning, those are going to be the carriers that you're going to offer right out the gate. So we start with those.
Okay, thank you, Spencer. Then the final question I have for you is, old school would be like an Excel reference sheet for pre-existing, so that we are able to go through UW and make sure we're making the best selection for the person's pre-existings. Do you have anything like that on an automated platform as part of the underwriting process, or a reference sheet?
Yep. So you're going to find when we go over the training on the universal quoting tool, that has an integrated underwriting tool where you'll be able to put in the pre-existing conditions and medications that the prospect has. And that'll actually filter out the carriers that they wouldn't qualify for right out the gate. So that's one tool that you'll have for underwriting. And then also in the Agent Resource Center, which I'll be sharing that link for everybody. The Agent Resource Center will have kind of a more traditional Excel spreadsheet that has the list of all the common pre-existing conditions and which carriers approve that condition and which ones do not. So you'll have basically 2 different avenues to assist with that underwriting process to help take a lot of the guesswork out for you.
Excellent. Thank you so much, Spencer. That's my wrap for what I have on this.
You got it. Thank you. Those were great questions. Helpful for everybody. Appreciate it. Before we move on to the term, does anybody else have any questions? Okay. Mark, I see you raise your hand there. Go ahead.
Hey, Spence. So it was just a flow question as far as with talking to the customer. You gave that example as far as if they wanted the 40,000 but they couldn't afford it. Would I, because the underwriting process takes about 24 to 72 hours, would I tell them, hey, I have this America amicable policy. I'll submit in for that, but for another one, just in case we don't get approved for that, do I submit it at the same time, or do I just write it down and wait those 72 hours before resubmitting for another thing. I just wanted to know what's the flow with that.
Yep. I probably wouldn't do that simply because in the off chance that both applications get approved, now that applicant is going to get billed twice. So generally I would just do one application at a time, submit that application, wait that time frame, prepare your client properly that you do have, another carrier in mind if the decision should come back unfavorable for them. But I would avoid a situation where, hey, you put two in at the same time, now they both get approved. Now she's getting billed twice, or he or she's getting billed twice. Now, if you have that conversation with that client and say, hey, here's what we could do just to try to speed up, this process for you. This one, we're going to swing for the fences with Transamerica because they've got the lowest rate, but there's a chance that you may get turned down with them. So what I'd like to do, if it's affordable, is I'd also put in a policy with you for you with Mutual of Omaha. And, in the off chance they both get approved, we can certainly just cancel out and submit for a refund with Mutual of Omaha. So that would be a question, a conversation I would have with the client. Historically, I haven't done it that way, but that doesn't mean that you can't. It certainly is a possibility, just you'd have to prepare the client for it. Most of the time what agents do is they're going to swing for the fences on Transamerica, see if they can get that approved. If that decision comes back unfavorable, at such time they're going to contact the client and let them know, and then immediately resubmit their application with Mutual of Omaha.
Okay, thank you. I appreciate it.
You got it. Carolyn, go ahead.
Hi, Spencer. First of all, I appreciate the training thus far with regards to the companies that you've shared and spoken about, which I guess I'm getting the impression that's probably where more of the final expense business is being written. My question is this, and I'm sure you'll probably get into this later. Are we going to learn through this training how to do what we're going to be doing in terms of the application via online or, on our computers, on our laptops? So because, okay, so that will be a part of the training as well. Yeah,
so let me answer that question here for you. So on the Agent Resource Center, which again, I'm going to share that link with you guys. On the Agent Resource Center, you're going to have links to videos of people walking you through how to complete the e-applications. So we won't actually go through an application here on the live webinar, but when you visit the Agent Resource Center, there's going to be a tab specifically catered to application training and application training only. You'll be able to see sample applications so you can see exactly which questions are being asked. There's a link to a video that shows you how to walk you through that application. And then also some carriers even have a PDF step-by-step instructions for you as well. So you'll have access to the application training right through the Agent Resource Center.
All right, thank you.
You got it. All right. Okay, so we're going to move on to the next one here, but if anything else comes up, obviously you can ask me during the next training too, that's fine.